Good morning. This is Larry McMillan with a market update on Monday, October 26th, before the market opens. Well, our indicators are still clinging to buy signals, although the market is certainly not going up much. Last week, it attempted to rally a couple of times and improve a few things, but tonight on Sunday night, overnight, S&P is down about 30 points. So we're right back down to testing the crucial support level right around 34.25 or so. We're giving it a little leeway down to 3400, but a close below 3400 would be pretty negative. The equity only put call ratios remain on buy signals, but they are in very overbought territory. In other words, they turned downwards again, which is bullish, but they are at such a low level on the chart that it's in an overbought condition. But the market can continue to go up even while things like this are overbought. So um, we would not have a sell signal on the put call ratios unless they turned decidedly higher. Breadth has become mixed. Breadth was a leader through the rally that took place in late September, early October. But right now we've got the New York Stock Exchange breadth oscillator on a sell signal. The stocks only is on a buy signal. The most positive thing here, though, is that cumulative volume breadth, which is something that we've been following for a number of years, um, that has made another new all-time high. So that's 5 times now this month, 6 times actually, including the last 2 days. That volume breadth has made a new high. Normally, S&P follows along to a new high of its own. So obviously, new highs are at 35.88. That's quite a ways up there. Below here, there is support supposedly at 3,300, 3,200, but I think if we break 3,400, that's going to be pretty decisive. VIX has been, well, election dominated, let's say. The term structure slopes downward, November being the most expensive, but December is now getting quite expensive as well. And these futures, November and December, are based on options that expire 30 days later. So specifically, the November futures are based on SPX options that expire on December 18th. So that's saying that, the peak of volatility is all the way out to Christmas almost. There's some indication that, it could even extend out farther than that. That's a lot of worry is built into the market, and we know that worry doesn't always become fact. I mean, Y2K was a lot of to do about nothing. I'm not sure this might not be the same, but at this point, I don't think you can take that risk. So the VIX futures on the surface have a negative slant. In other words, they're sloping downwards and they're trading at a discount to VIX, but it is because of the election and not necessarily because of market conditions. The CBOE volatility index term structure slopes upwards. So all in all, we're still watching and waiting. Essentially, we're holding on to some bullish positions as long as S&P continues to close above 3,400. And this is a seasonally bullish week coming up, the last week in October. So we'll see how things play out, but obviously the election is just a week and a day away, and that's going to become an even bigger factor as we move forward. So, invite you to visit our website. We had a great webinar on Saturday discussing volatility trading and the market, and we're doing another one of those in later in November. And also take a look at our newsletters. Things are going very well in our recommendations there. So thanks for listening and have a great week trading.